it just there. And you can see the price dropped down into the bottom edge. I saw that the offers dropped right out. The bids actually started to increase. And I started to just put my buys into place. And because I put my buys into place, I've just made $137.50 on my little buy order for 5 contracts, and another simple little quick profit, isn't it? It's dead easy to make money when you just do the trades. It's, you know, you've got to do the trades. You've got to be willing to step up and step into these little phases to try and capture the right trade at the right price, quietly, passively making the money. And again, as a scalper on the euro, you might say five contracts. Yeah, 5 contracts. This is a 6E contract, guys. 5 contracts is not a lot. But you can see that even if you traded one lot, that's still 30 bucks. Okay, 25 bucks. It's still 25 to $30. Your stops are still at break even. It might go for 100, it might go for 500, it might go for 1,000, it might go for absolutely nothing. You make a few dollars, you make 500 bucks, you make $2. It doesn't make any difference. You're still in it, you still make money, and it's still another successful scalp trade. So it was really because you'd mentioned it yesterday, I thought it was worthwhile just, you know, just obviously checking what you were doing on the trade to make sure that you had obviously thought of this little angle here. Because obviously if you wanted to trade this as a trade here, the trade is obviously short the green line. The trade is short the green line. But if you're going to not want to trade short the green line, you could of course just simply go long the euro. I mean, it's the simple version of it, isn't it? It's that idea that it's the simple version of that one trade, and based on the fact that it's the simple version, you could obviously drop it down just simply to the 6E contract. It's just went up to $168 now, guys. Stops are now in at break even plus a half a point, 1 tick. So break even, half a point, 1 tick, right there. Stops at break even. $168.75, $168.75, and another lovely little quick scalp trade, isn't it? So all you're doing, guys, is you're comparing the euro dollar to the Aussie yen. Now, there's got to be a reason. Now, Reeves mentioned what his reason is there, is it he was using as a hedge. Now, that's obviously not what I've taken from that. I thought Reeve was doing it just because he was maybe bored and he was looking for some scalp opportunities. But whatever reason you're doing it for, we're just checking that this is that this idea hasn't been missed. This process hasn't been missed, because it is a way of being able to trade these triangular little statistical arbitrage opportunities. You're trading effectively. Remember, all we're doing, guys, is we're looking at this trade here. We're looking at that trade. That's all we're doing. And we're trading the separation. That's all we're doing, isn't it? We're trading the separation. You might be saying, but that's easier to spot. I don't think it is easier to spot, because you're losing the directionality in that trade. You might think it is easier to spot. I don't think it's easier to spot. I think it's easier to put the relationship into place and use that against your Aussie yen line to try and establish exactly what the opportunity is. It's the same as adding the if you think about the FOB spread and the NOB spread, and you might wonder whether it's a buy or whether it's a sell, by putting in the 5s, 10s, it gives you whether it's a buy or a sell. You can see it because you've got the 5s, 10s. It gives you that 3-line narrative. So when I look at this trade here, when I look at this storyline here, it looks, you know, you might say it's dead obvious it's a sell on the euro. It's dead obvious it's a buy on the euro. It's dead obvious that buy on the euro. Well, if it was that bloody obvious, why did you not take it? It should be obvious, but when you look back, you can see these divergences happen for a long time, and sometimes the euro is the leader. Not often, because it's the lower beta, of course. So the higher beta, which is Aussie yen, is a far, far higher beta, and even higher beta than that is the Kiwi yen, of course. But if you wanted to try and look at the Kiwi yen, you could always do the Kiwi against the Swiss franc to get that storyline. So you could compare this to the likes of the Kiwi against the CHF, for example. And you know, obviously that should have a very, very similar characteristic, but you're using two different markets just to give you that confidence that what you're seeing is the exact same. Now this should be almost identical to the Aussie yen, almost identical. Any changes to that idea there. So you can see it is almost identical, but this has a higher beta. This has a higher beta than even the purple line. You know, it has a higher beta than even the purple line. So you can start to recognize some of these elements, some of these little graphics, but I'm just adding complications to something that doesn't have to be necessarily that complicated. All you're doing is looking at the euro dollar against the Aussie yen, and when you look at it as a relationship, all you're seeing is the value that's in that trade in terms of a net value position. And when you see a net value position like this, that's what I'm looking for right there. That's the kind of situation I'm looking for right there. It stands out like a sore thumb. It's almost exactly the same as I mentioned of the, it's almost exactly the same as the fob knob fight that we showed earlier. Fob knob fight that we showed earlier, isn't it? Crystal clear? So you can see these kind of opportunities, you know, when you start recognizing, for example, that there, look at that opportunity to buy euros. The green line's massively premiumed, isn't it? Massively premiumed against everything. And the purple line is, it's premiumed, but it's not as, nowhere near as premiumed as the green line. And as a result, you could have smacked into some heavy, heavy long trade on the euro at that stage. And you can see that was actually the bottom of the euro this morning at 6 o'clock. It was actually the bottom tick of the euro at 6 o'clock. So you can actually see when the euro becomes overbought and oversold. You can see it, it stands out because that green line should accelerate away from the purple line like it did here. So when we see the relationship accelerating away, it's telling us that the euro is going in the wrong direction. And that gives you the idea that the euro should be a sell trade because it's going in the wrong direction. And that's just the short-term process that you can use for scalping. And obviously, if this green line turns up and the purple line turns up, we're going to be able to buy the euro all over again. We might be able to buy the euro all over again, guys. Anyway, it's a good process, Reeve. As I said, I thought I'd mention it again. Just bring it back to people's attention if they had a particular interest in it. This morning, welcome in, by the way, guys. It's just after 1 o'clock. It's the 2nd of September, Thursday, 2nd of September. It's 10 past 1. We've been talking about the fob knob fight and just how good a trade that is. We showed many scalp opportunities. I'll be back in a second.